Today is Friday, November 10, 2023. 11 of 11 sectors closed green. Technology led, and utilities lagged. Medical device company Trees Medical Concepts fell 38% after missing third-quarter earnings and revenue estimates. It also cut its full-year revenue guidance amid slow demand. Shares of biotech giant Illumina plunged to 10-year lows after cutting its full-year earnings guidance, with its third-quarter revenues missing expectations. Semiconductor stocks remain in focus, with Synaptics rallying 11%, following better-than-expected earnings and revenues. Meanwhile, UD, The Trade Desk, and other slower-growth tech stocks remain under serious pressure in the current environment. Hennessy maker Diageo fell to three-year lows after the drink manufacturer offered investors a cautious outlook. It said growth should slow in the first half of next year due to Latin America and Caribbean weakness. WWE parent company TKO Group dipped 7% on news that executive chairman Vince McMahon will sell 8.4 million shares, with other executives and the company itself as potential buyers. Lastly, crypto's rally continued this week on optimism that a spot Bitcoin ETF is inching closer to a Prova L. The total crypto market cap rose 7.5% to $1.4 trillion, an 18-month high. It was another week of gains for the U.S. stock market indexes. Well, except for the Russell 2000. Below, we can see the tech-heavy Nasdaq 100 leading this week's charge, with the small-cap Russell 2000 sitting in the red since Monday's open. If you forgot that Groupon was still a publicly traded company, today is your yearly reminder it exists. And as usual, this reminder comes up for the wrong reasons. The online discounting marketplace stumbled 35% after its third-quarter results of 12 cents in earnings per share on $126.5 million in revenues. Earnings beat consensus estimates by 1 cent, but the 12% year-over-year revenue decline left it below forecast of $129.7 million. A challenging macroeconomic environment and cautious consumer continues to weigh on demand. The company said engagement in its platform declined across the board, resulting in lower unit sales. International revenues fell 14% as customers fell 17% to 6.6 million. North American revenues fell 12% as customers fell 15% to 10.5 million. Additionally, the board of directors approved an $80 million fully backstopped rights offering to all common stockholders. The non-transferable rights purchase allows holders to buy the stock at $11.30. However, the company's largest shareholder, Pale Fire Capital, has agreed to backstop the offering by purchasing any unsubscribed shares. Along with its drastic cost-cutting and asset sales, the financing should bolster the company's liquidity enough to support its turnaround plan. It's now shifting from a cost-cutting first mindset to a top-line first mindset, as investors await revenue stabilization and eventual growth. That said, the turnaround may take longer than Wall Street has the patience to wait. Management's fourth-quarter revenue and adjusted EBITDA forecasts were below expectations, as were its fiscal 2024 numbers. Its interim CEO told shareholders, "Transforming a business like Groupon is not easy," which did little to inspire confidence. Overall, investors remain concerned about the struggling company's ability to achieve profitability and growth simultaneously. It certainly made some progress in both regards, but not without additional share sales and major strategy shifts in the business. Now that most of those adjustments are completed, it needs to focus on growing its core business. And with many struggling businesses, but popular stocks failing to figure it out, there's a lot of doubt that Groupon will be the one to get it right. GRPN shares fell 35% today, giving back a large portion of this year's gains. Plug Power, which had its worst day over 9 years. The hydrogen technology company issued a warning about its financial position during its third-quarter earnings release. Although its current revenues and fourth-quarter forecast aligned with expectations, it said it was hit by unprecedented supply challenges. The hydrogen shortages are driving up already inflated costs, causing it to need additional funding to boost its liquidity until the hydrogen market rebalances. While the management said it has confidence it will execute a liquidity transaction soon and improve margins throughout next year, Several analysts believe it's not worth the risk and downgraded the stock. It appears too much is riding on the government, with PLUB pursuing a potential loan from the Department of Energy worth $1.5 billion. It's also awaiting guidance about a planned tax credit for hydrogen production in the US. As with everything government-related, things take time, which the company doesn't have the luxury of. TLUG shares plummeted 40% today. Battery cell developer FREY Battery also renewed liquidity fears among investors after saying that it was right-sizing the organization as part of a broader cost savings program. It's hoping to cut its cash burn rate by 50%, improving its projected liquidity runway to more than 2 years. The company is now minimizing spending on its Giga Arctic facilities in 2024, instead focusing on the continued development of technology at its customer qualification plant. FREY shares fell 28% on the day to new all-time lows. Lastly, commercial solar power solutions company Sunworks continues to struggle in the current environment. The company's third-quarter loss of 24 cents per share was in line with expectations, but revenue was down 30% year-over-year and well below analyst expectations. SUNW shares fell 10% and made new all-time weekly closing lows on the news. Moody's cuts USA outlook to negative. The ratings agency lowered its outlook from stable to negative, pointing to rising risks to the nation's fiscal strength. However, it reaffirmed the long-term issuer and senior unsecured ratings of the country at A. The move comes as Congress faces another looming threat of a government shutdown if a funding bill is not passed by next Friday. With progress limited due to how long it took to fill the House's Speaker position, it looks unlikely a long-term solution will be figured out in time. UAW workers at 1GM plan narrowly vote against labor deal. United Auto Workers UAW members at General Motors Flint Assembly Plant in Michigan are pressing their leverage with 51.8% of votes opting to press their leverage and hold out for a better deal. Across all of its plants, roughly 58% of workers have voted in favor of the deal, but with more voting to begin in the coming weeks, it could truly go in either direction. There's been little word on the voting progress of workers at Ford and Stellantis plants so far, leaving investors anxiously waiting updates. Max and Netflix are rumored to be working on a $10 streaming bundle. A Wall Street Journal report indicated that Verizon customers may soon be able to pay just $10 per month for the ad-supported versions of streaming services Max and Netflix. With competition in the streaming space remaining fierce, distribution from companies like Verizon, combined with bundling several services, is a strategy that may cut down on customer churn. This practice is becoming more prominent as inflation pressures consumers and streaming services raise their prices. Apple reaches a $25 million settlement with the Department of Justice. The consumer technology giant will pay $25 million in back pay and civil penalties to settle allegations that it favored visa holders and discriminated against U.S. citizens and permanent residents during the hiring process. This is the largest fine collected by the DOJ under the anti-discrimination provision of the Immigration and Nationality Act. Apple said it unintentionally failed to follow the DOJ standard and will remediate its program's issues as part of its settlement.